Why do Lucid shareholders believe the company can't go bankrupt? Just because the Saudis are investing in it. It's an interesting bit of psychology, isn't it? There's this unwavering confidence some shareholders have in Lucid, rooted deeply in the fact that the Saudis, through their public investment fund, have a big stake in the company. First off, the Saudis, they're not exactly wandering around with empty pockets. They have profound wealth. It's staggering, the kind that can hold up an empire. So investors look at the public investment fund's investment in Lucid and think, well, they've got enough firepower to keep this company running through thick and thin. But let's unpack that for a moment. Sure, having a cash-rich investor can be a bright flag signaling safety. For one, they can provide financial support if the company runs into trouble, maybe even bail it out. That kind of backing can also boost credibility, help in negotiations with other investors, and generally make the company's future look a tad brighter. However, having a big, wealthy investor is not a foolproof survival guarantee. Businesses can still mismanage resources. They can still fall victim to market shifts or technological leaps made by competitors. It's like having a really rich uncle. Just because he's loaded doesn't mean he's going to pay off your mortgage when you quit your job to start an alpaca farm. Here in Portland, Oregon, where I'm based, we've seen companies backed by strong investors struggle when they couldn't adapt fast enough or manage their finances rightly. It's not a Silicon Valley frenzy here, but the same principles apply. Also, you have to consider the investor's agenda. The Saudis' PIF has strategic plans. They're thinking big picture. It's not just about Lucid for them. They're diversifying away from oil, looking decades into the future, investing in multiple sectors. Lucid is just one piece on a very large chessboard. If that piece falls, it's not checkmate for them. It's barely losing a pawn. Investors are also swayed by herd mentality. They see others believing in the invulnerability of Lucid because of the Saudi investment, and they jump on the bandwagon. It's contagious optimism, but like any contagious thing, it can sometimes be unwarranted. Plus, let's be clear, bankruptcy doesn't always mean the end. It can be a restructuring process, shaking off bad debts, and coming out leaner. It doesn't always equate to a complete failure or shutdown. In summary, there's no such thing as a bankruptcy-proof company, even with a sugar daddy, or in this case, an entire kingdom, backing it up. Lucid, like any other company out there, needs to sell a competitive product, manage its cash flow smartly, and keep innovating. Without that, no amount of foreign investment can keep a bad business model afloat. So, Lucid shareholders believing in the Saudi safety net might want to reassess and realize the net is there, sure, but it's not necessarily underneath the tightrope they think they're walking on.